Hey, so I wanted to look at ticker symbols XLI, which is the industrial industry, XLE, which is the energy industry, and then XLB as the materials industry. Um, Last time we looked at this was about beginning of April. So it's been a little while, and this is just going to be technicals. I was looking at it earlier, so I might add some additional insights as we go through this, but this is where it stood when we saw it on April 9th, and this is XLI industrial sector. Last time we saw it, and maybe it'll be easier if I just show you the spreadsheet. So these are the three that we're going to go over. We have the XLI, XLE, and XLB highlighted in yellow. So we're going to start with XLI. And again, last time we looked at it was on 4/9. And so here we are at 5/31. So about uh, close to 2 months, we'll say. At the time, it's at 97, and we were saying it would look like a buy. Um, I'll have to look if I actually made a buy because I'm kind of starting from scratch again. Um, XLI, so if we zoom in just a little bit, and so I guess just to summarize this, starting off with this orange squiggly line, that's just kind of how I saw it going for the foreseeable future. So you can see it looks like I had potential opportunity where it might dip below the green line. We're getting close to it. Um, but overall, the point of this was to show that it's probably going to bounce between about $103 and $96. And so anytime it gets close to 96, that seems to be an optimal time. That's the point that I picked. I think ultimately it could fall to 82. That's very possible. Um, Let me just make sure. Okay, so we're good on time. Uh, and then the purple lines, that's like the overall uptrend it's been on for, gosh, let's keep going. Back since about 2011. And probably, technically, it's gone back to, we could argue 2009. So it's been on this uptrend. So if we zoom back in, I just point that out to show that, yeah, we could pull back to a point like this too. That is still below our green line. Still not even really close to the black line if you think about it. So right now, if I were to say, I guess what I could do is let's put in where I think it'll end up around 6:30, so the end of second quarter. So that's just a month away. If I were to guess where this one could be, let's see, somewhere like here. Um, I'm not going to drop it as low as this point because, again, I just kind of made it up. Um, I'm not sure if I should keep that orange line or not. Um, I guess we'll wait until the end of the second quarter and then we'll take it out. But that's kind of where I'm seeing it. So I think right now, if we just compare it to the box, it's like right in the middle. Um, I think overall, though, this one, it's very near that buy point. I'm pretty confident in that one. And again, if we just think of worst case scenario, it's currently at 96. It at this point, it could pull back to like 89. I think I would just buy along the way. And based on what I'm hoping to do with this channel is, check on these once a month would be ideal. And so, as if we're looking to build out this position, uh, basically I would just do one this time. If it's at that price or better, I'd probably buy it again, and I would just buy it out. The question is the return greater than what we could put it in another thing? And so that kind of is where the purple uptrend line comes in again, because if we just take, say, 2022, we'll go to the very beginning. It was at about 105, it looks like. About 105, so it's like right here. We can zoom in a little bit too. So 105. Technically, this was a down year, it looks like. 2022, end of it. It was actually a down year, so that's possible. And so that's why maybe we don't want to pick this one, and mainly because it's a growth thing. I think for my purposes today, I do want exposure, even if it is going to be up and down. I think the overall trend, the reason why I'm willing to go for this one is just how long it's been in an uptrend. It broke out above, and this happens. I mean, it broke out here. Like, I wouldn't have bought it, you know? And so right now I'm feeling it's definitely possible it could keep falling. It's just the reason the green line comes in is it doesn't want to break. It's still on the high side of the uptrend. Like, what I'm gonna do here is see if I can do a parallel line. We'll do parallel line. Something like that. Is that parallel? And then we'll match up with there. See if I can bend this. Yeah. Okay, so as far as the halfway point between these, whoops. I thought I could move it. Can I move? Okay. So the halfway point. Man, I gotta eyeball this, but that's close enough. And then I want to bring this in just to make sure, so we can even that out a little bit. Oh, go that way. Okay. Yeah, that looks flat. So I think the way it's heading, like, let me change this too, just so we can see it better. Purple. We'll make that 3, something like that. Okay, so with that detail, it's crazy, but I actually think I would wait. Based on our markings, though, I would say now's a decent time. Gosh, I'm so tempted to mark this one blue. I'll mark it. I'll mark it green. We'll follow the rules, but we're adding more to this, so I do feel like this one's going to go down. I think it's more likely it's going to cross that green line than not. Again, I'm not really basing it on anything, just what the technicals are showing. Let me know what you think in the comments, where you would mark this. I just feel like it's going to go lower. Ah, man, such a judgment call. But anyway, so let's just update the sheet. So 96 was the buy point, or what it currently is, I mean. Buy point at 96. See, what I'm going to do is add multiple buy points. That's going to be my way around it. This week, it's 96. I would say 95, 96. So we'll keep it. We'll keep it. Okay, so 96, potentially down to like 89. We'll say those are the buy points. So let's put in 89/96. Okay. Where are we at? Okay, 89.96. Resistance. We have 103. I would say even today, like 102. 102, like 101. We'll say, I'll bring it down a little bit. It was 103, I'm going to change it to 102. That's all. So our notes we had were long-term uptrend, but it's been consolidating between 96 and 103. Again, that's the red line and the green line. that was made due to, if we scroll back out, it just seems to be in that zone since about April of 2021. It did take a dip between April 22 and November 22. So it had about a 6-7 month window where it actually was below the green line, but it looks like it pulled itself back into that long-term uptrend range. And so right now we're on the upper end of the uptrend that it's currently on. That's why I think this one is very likely to pull below the green line. So depending on how much exposure you want in this one, which is not a crazy good return. Let me see what it was supposed to be. Then we'll move on in just a minute. So right here we have 1231. Even on the high side, it would have been what, 93. If we take it to the end of 22, let's see, that'd be what? Where are we at? 99. $93 to $99. Okay, so we have 6 divided by 93. That's like 6% return. You know, for this one, I'm gonna call it blue. But not for long, in all honesty. Let me see this again. I'm just gonna change the buy point to 95. So overall, it's like, it's in a good spot. It's just, I think we could get better. Let me put in, I'm gonna leave it green because that's it. That is the rules, like that's how it's set up. But I am gonna say average yearly return equals 6%. And so we're putting that there because for me, I'm not going to buy this one unless I really like industrials. And so something else I added. So this is the first one. We're going to spend a little bit of time on it, and then we'll get in the flow for the second two. So this is XLI. These are like the top holdings, the top 10 holdings in it. They're at about 40%. So if we investigate one of these, I'm projecting that there's going to be all of these, possibly just a handful of them, that is also at a good buy point or very close to a good buy point based on this. And that was kind of another reason for doing these ETF type, is to see what's actually in those sectors. And so seeing this one pull back a little bit, that's letting me know that these other 10 stocks might be getting near a buy point also. Currently, I don't follow any of these, and I'll show you here. So if you see one of these that you follow and think I should follow, please share. I'd be happy to read that. Otherwise, yeah, I don't know which one I'd look into first. I know I've owned Raytheon before, and I believe they're more like a war type company, like selling Army supplies, Navy supplies, things like that. I guess defense. They're more defense. So I must have bought them before for a reason. So I'm just going to make that one darker green, just so I know to look into it more. The other one, yeah, I'm not really sure. Hopefully this is big enough also. I'm going to make it bigger here. So if any of these you're familiar with, if I had to choose a second one just to look at, I know they're like planes. So planes could be a thing. Lawn, payroll, possibly payroll would be a good one. I'll look into them. Another plane, no idea. UPS, Honeywell. I'll look into Honeywell. Okay. So that's pretty much it. So that sums up XLI right here. So right now it's at 96. We have a buy point now of 95. It was 96. So it's at that buy level, and resistance is at 102. So it's not a big gap, but you're clearly at the lower end, or very close to the lower end. So I think it's worth it today. Average yearly return is only 6%. That's why I would, like me personally, um, I want to take more risk, I guess is the proper way. Uh, and so that's why I'm gonna just look at these three just to see what's going on there. Um, but yeah, let's just move on to the next one. So XLE, um, yeah, we'll just move on. So XLE. So right now, if we look at the uptrend, which this one is since we'll say November of 2020. If we go back further, so energy, yeah, so we have a big range on this one. We had this big uptrend, but if we go back to the basics, so with XLE, uh, I it's a different story than XLI. Just for a second, XLI, I feel like the overruling theme with XLI is that it's in this big uptrend, right? But with XLE, I feel like the big trend for them is our horizontal lines, which, and I say that because if we zoom back to about 2007, we were in that range more or less the whole time, except for about October of '08 to about November of 2010. So that was like a year, a little over a year, where it was below our green point. So ideally, we would have been wanting to pile on there, knowing that it should bounce back. But again, very soon, um, if I were to put in a trend line, like I could make one. So we'll put one in just to see if we find anything. Trying to keep an eye on the clock, but I mean, we have time. So if I were to draw this in something like that up to here, something like that. So what we're doing is trying to catch as many of the lows like on point as possible. So for this one, oh, that's the wrong one. What's this one do? That turns it. What did this one do? It turns it. Yeah, it turns it, but it narrows it? Okay. So this line drops down. Most of the peaks, I would say, yeah, that's pretty good. And then the bottom, man, why can't I do this? The bottom, I want to pinch this in, but it's not letting me. What if I do this? How can I do it? Wait, what? Well, how do I get it up then? So I can't move it. Oh, here we go. Jeez. Couldn't figure that one out. Okay, so that's good there. And then this can pull up. That's pretty good. I wonder if, okay, let's look at, we'll just do the same method. So parallel, let's drop that in there, that's fine. There, we'll turn it a little bit. That's pretty good. And as far as in the middle, that seems pretty good also. Okay, that paints a different picture. Because this go, and we give it a lot of room up top too. When it hits the low, it seems to be fine. But even that, I mean, okay, so that's a positive thing. So I would potentially raise our green line to match this purple line. Uh, so so let's just zoom back in, and I'll try to make this one quicker. So what I think's happening is this uptrend is going to be broken. So when we get to the end of quarter three, or quarter two, I mean, we're probably going to remove this uptrend because it's probably going to pull back uh, pretty deep. Um, Again, this is going off of knowledge from like 2 months ago, but just the things that I was hearing back then, yeah, it was telling me this one's coming down. So let's just draw this in. Let me zoom in. Okay, so here, arrange like that. Let's zoom out. I want to make this, gosh, it gives me trouble sometimes. Okay, so gray. So that's our projection box. For the end, let me see this purple one. So here's another one. So with XLE, it's not going up all that much that fast. So just kind of sticking with our method from before. So we'll just go out here. So right here, whoops, we'll take the low of 55 and going for 1 year, so 55 till 57. Okay, so let's just do the math real quick. So 2 divided by 57, that's a 3% return. So another one, it's like, I don't really want to get into this one because there's not really any growth. Like, the idea would be to catch a below trend line, have this big pop. Like, that would have been a very perfect cycle. And I should be on that. I still regret that. So just a quick story. I was in ExxonMobil. I got in somewhere in here-ish. So like first half of 2020. And yeah, I wanted to hold that for a while. I got talked out and sold it. But if I would have held that, man, if I would have trusted my gut, I could have capitalized on this. Again, we don't know how it would have played out, if I would have sold it by now, or how I would have handled it. But just a thought. But yeah, so I think end of second quarter, that's kind of my range. So if we just look at where it is right now, 76, let's update our tracker here. So hold on, what was it? So it was 84 when we looked at it last time. And just so we can point it out, that was here, this candle. So 82, or wait, that's not this one. It's this one. Okay, so it was at 85. We had 84, so just maybe a timing thing. But right now, it's at 76. We had buy points marked at 67 and 83. So 83, that was based on this uptrend. So 448. So we were saying 83, and again, I was just projecting out. So we did hit 83 early May. Clearly we're below that, 76. But the thing is, I think this trend line got broke. So the first I would even consider buying this is probably, I'm updating this to 61. 61 is the new buy point for this one. 61 resistance for this. I'll still keep it high, 91. I say 93. I'll say 91. And then let me just update the date to 5/31. The only note we had was long-term uptrend. We proved that in two separate ways. I originally, when I wrote this, it was using the long-term uptrend from 2020 till today, because that's like 2.5 years, close to 3 years. And even though that one's broken, we just drew in this new upward trend line that's been intact since pretty much the beginning of this ETF, which began in like 1999. And clearly it just went way above trend for a while, but it was also way below, so it just like rubber banded or something. And so now it's pulling back to its comfort zone, that long-term uptrend. But again, the thing with this one, the reason why I'm willing to pull my buy point back a lot further for this is that calculation we did earlier where it only shows like 3.5% as an average return. But again, we will look at the concentrations here to see if I were to buy anything, like what looks interesting. And you'll see what I mean in a minute. But average yearly return equals about 3.5%. Let's see. I guess I'm gonna say broke shorter trend. But long-term uptrend intact. Okay. So again, looking at this, I guess this is the summary. So we have right here in the middle, that first yellow one, whoops, XLE. So currently it's at 76. I'm pushing our buy point down, so I'm going to make this one blue. Blue here. And resistance still roughly where it was. It was at 93, got pulled back to 91. We updated the date already. And our note, similar to XLI, is average yearly returns only about 3.5% on average. Some higher or lower, but 3.5 is the average. It broke its shorter uptrend, where it was going like rapidly fast. But that long-term uptrend, that 3.5% uptrend, that is still intact. So I guess let's go to ETFs for XLE. XLE, and again, this is energy. So if I wanted to pick one here, blue. Okay, so blue because I was marking it fair value. And I guess, yeah, so it's blue. So you know what? I'm not even going to look at this right now. It's not close to our buy point. It's just a fair value. So I will just leave it on the screen for a minute just so we can see what's in there. And you can see the concentration here. So if I were to do any, I'll mark these as a darker blue because those are the ones I'd pick. Hopefully it's, still clear to see depending on your screen. But I would just pick those two. I know this is like the Warren Buffett stock. He just bought big on that. But these are the big movers. They're the most known. I think we'll pick this one just because of the Warren Buffett thing, and one of the stocks we cover is Berkshire, so they're putting a lot of money into that, so it'd be best to look at that. But that's XLE, that's energy. Finally, we have XLB, that's materials, so let's look at that one. Again, hopefully I'm a little bit quicker on this, but it always kind of depends on where it was when we left So just looking at this, we looked at this on April 8th. So April 8th, 79, that's what we have on our tracker. So right in here, right at the end of this candle, it's gone down. It's gone below our buy point. So let's just update what it currently is. So right now it's at 75. We had buy points marked at 77 and 73. So 77 is that green line, and 73 is right around the last time we looked. So 72, we chose 73. Again, I think I did that because I just wanted to, it was way up here based on the trend. The likelihood of it dropping that fast, kind of unlikely. I mean, most candles are, only so big. So I figured it would possibly pace down here. I guess just to get it over with, if I were to guess where I think this one's going to end at the end of the second quarter, let's see, my box would be somewhere in here. This long term, so this one has a couple uptrends. The longer one is the pinkish. Hopefully we can see this, but it's like that pinkish color. And so potentially it could keep pulling back. And then this darker purple, we made it darker because it's more recent, and it seemed to be a more impactful trend. Man, this one could really fall like energy. What I want to do is just look at the ETF concentrations. So this is XLB. So XLB, so we purposely followed one of these, and you'll see why. It's Lindy. We'll make that a darker green because we're already following it. If I were to look at a couple more of these, well, I guess before we get to that, let's just look at, so Lindy, I just started following them. Oh man, I don't remember what they do, but it's something with materials. Don't think it's plastic, but I'll have to look. Sherwin-Williams, that's paint, so materials. Freeport, no idea. Cordova, nope. Ecolab, no. Dow, is that oil or something? Newmont, I have no idea. Nucor, no idea. PPG, they have a big office in Pittsburgh, and aren't they paint or something? They're also paint. I guess I'd look at this one just because I know they have a big presence in the area that I'm in. I guess just if I had to pick, I'd probably just pick one I've never heard of. I mean, Air Products, that's clearly some. I guess this one. But yeah, so just materials, right? So going back here, let's see. If I had to draw this out to this one's hard to call. I'm looking at, let's see, September. If I were to I'll just put in a box for now. Let's see, so September. Whoops, yep, keep zooming. Let's see, so September, too far. So September. Man, that other box is so big. How many weeks is this? 3 weeks. Why is this so small? Oh, I see. Okay. So I do like this box. I like this box. I'm gonna, if I were to update my buy point on this, because I did have 77, but I also had 73. I guess we'll keep them. Because it's below, you know? What was energy? Wasn't below. XLB, it's below. Because it had some consolidation between April of 21, had this big dip like a lot of others, from June of 22 to November. Shorter dip, 5 months. I think the others were like 6 or 7. Pop back up, and now it dropped below once before, but just based on projection, I mean, those are, I'll keep the 2 buy points, 77 and 73. I think 73 is more likely to happen based on where we are today. And as far as, say, next quarter, next quarter, I kind of think we're gonna materials. I'm not sure what they're projected to do. Again, we'll look into it once we get like more into the news aspect. But again, just based on technicals, this is just kind of what we're seeing. So for this one, I don't want to go too outlandish, but I do think it's going to keep trending downward. Because again, this upward purple, I guess we're saying it's been intact for, I mean, you could argue it's been intact since about 2012. About 2012. But then that deep purple, so from 2012 till today, again, so that's like 11 years. As far as the light purple, we could argue that also since 2020 till about 2000. So 20 years. 20-year uptrend versus a, whatever we said, 12-year uptrend. But we recently like exploded out of it, and this has never happened. I mean, clearly it's happened, but not to the magnitude of this one, and that's why the game's kind of changed a little bit. But I mean, all I'm saying is that's a possibility, and so I think I'm gonna say 67 might be in play. Where would that be? Where'd I get 67? So 65. I would say 65. And then just to give us a little bit of buffer, yeah, let's just put 65 in there. I think 65's in play. But based on the buy points, how long has this consolidation been going on? April what? 21, so like 2 years, we'll say. 2 years it's been like that. 2 years, and then 12 years. And then this would be 20 years. Yeah, I think 65's in play. Okay. Let me know what you think about that one too. Again, just curious to see what you think, if you're seeing the way I'm seeing it, or if you know anything more about it, that'd be great too. But I guess that one, is the one other thing I want to do is look at the average yearly return, and then I think we'll just wrap it up with that. Average yearly return equals what? So if we just look at, we'll look at both, I guess. So this one, so if we go 23, come on, stick with me. let's see, 124. So we have about 67 to 69. It's going to be a lower return than the other one. Hold on. So what was it? 67, 69? 67, 69. Okay. So right off the bat, it's going to be lower. So 2 divided by 57. Or, I'm sorry, not 57. 2 divided by 67. So like 3%. We'll do the average. So we'll say 3%. 3% to the long-term, this long-term uptrend from, let's see, about 87 up to 92. So like 5. 5 divided by 87. It's like 5.7%. So about 3 to 5.7%. So not very good in terms of return, but it is in that long-term uptrend. No matter how you look at it, it is in a long-term uptrend, whether you look at it for since the beginning or since the past 10 years, it's been in this uptrend. We're nearing the bottom of the 10-year uptrend. So for those reasons, I do think it is a buy. Because that's two good things. And that's pretty much all you need, really. But the thing is, I think it's going to continue trending downward. And I'm kind of feeling like there's potential that it's going to drop below into this lower, this pink uptrend. I think if I can, I'm going to switch the colors. So that was that one. And we'll make this the lighter purple to show that it's the shorter uptrend. And we'll see. I just think it's possible that it's going to pull back into this longer term, this since the beginning uptrend, which is like 20 years. I think it's possible that it's going to pull back into this range. But overall, you know, if we want to open a position in this to get a 3 to 5% return, this is a good one. I think what's more likely to happen is I'm going to look into the ETFs, what their holdings are. And so for this one is materials. So the more this one dips, that means there's going to be better opportunities in this. And so maybe Lindy, if we look at them, if we find this long-term uptrend and we see that they average like 10 or 15% each year, that's worth it to me. You know, I want that type of pick. Preferably 20%. Obviously, the higher percent return is better, but if we can get like, say, 10, 15, the higher the better, of course. But if I saw 15%, I'd be like, okay, let's pull into this one. I'll also look at APD just to see, and PPG just to kind of spread it out. I think they're in different, same industry, but different aspects of the sector, such as air versus paint versus, I think, a plastic company. So we'll continue to track this. But that pretty much sums this one up. I think the industrial is at a good buy point. Energy, I'm willing to, they're in the fair value range is how I would consider them. And then materials, they do seem like they're in a buy point. I think we're going to have better opportunities ahead on that one. So maybe an asterisk next to that. And again, just keep in mind the average salaries or average yearly return on these very low, but it's safe, I suppose. But yeah, that's pretty much how I'm seeing it. So that's it. Let me know what you think. If you have any questions, comments, anything like that, by all means, let me know in the comments, and I'll get back to them, or I'll do my best to answer them. Outside of that, please like, subscribe. I'll see you on the next one. Bye.